So I want to demonstrate how to reconcile income under variable costing with your income under absorption costing, right? Because we know under variable costing, the fixed overhead costs are expensed in the period that they're incurred. Under absorption costing, those fixed overhead costs attach to the inventory and they don't get deducted on the income statement until that inventory is sold. So when we have ending inventory at the end of the period, your absorption costing is going to be higher than your income under variable costing. Okay. When we sell off the beginning inventory, okay, the fixed costs in that beginning inventory are going to be subtracted on the income statement under absorption costing, but they were already subtracted under variable costing because they were subtracted when they were incurred. So your absorption costing will be lower by the amount of any fixed costs in beginning inventory. So in 2020, our income under variable costing was $10,000. We didn't have any beginning inventory, okay, but we had 100 units in ending inventory. So the fixed overhead that was attributable to those 100 units, if there's $1.80 of fixed overhead per unit, we have 180 of fixed overhead. So our income under absorption costing is going to be 180 higher, or 10,180. In 2021, our beginning inventory is going to have the 180 of fixed overhead cost that was in the ending inventory. We ended 2021 with $50. With 50 units in ending inventory. At $1.80 fixed overhead per unit, that means there was fixed overhead in ending inventory of 90. Okay. So this 90 in ending inventory, okay, was not subtracted under absorption costing. So this would be added to the 12,000 under variable costing. However, the 180 that was subtracted last period under variable costing is going to be subtracted in 2021 under absorption costing. So our income under absorption costing, we're going to add the ending inventory fixed overhead costs and subtract the fixed overhead costs in beginning inventory. So we would have 11,910 income under absorption costing. In 2022, the $90 in ending inventory becomes the fixed overhead costs in beginning inventory under absorption costing, and that's going to be subtracted this period under absorption costing. Was subtracted last period under variable costing. But this period, we have 80 units in ending inventory at $1.80 per unit. So there will be 144 costs that are subtracted this period under variable costing, but they will be in inventory on the balance sheet under absorption costing. So if we take our variable income, add our fixed overhead and ending inventory, subtract our fixed overhead and beginning inventory, we can see we have 16,054 as our income under absorption costing. That 144 in ending inventory becomes the fixed overhead and beginning inventory. And then because there's 110 units in ending inventory at $1.80, there'll be $198 of fixed overhead in ending inventory that's subtracted under variable costs, but is not subtracted under absorption costing because it's sitting on the balance sheet in inventory. So to get our net income in 2024, we take the variable costing, we add the fixed overhead and ending inventory that was subtracted this period under variable costing, but is in the inventory account under absorption costing. And then we subtract the fixed overhead and beginning inventory That's subtracted as cost of goods sold under absorption costing, but was subtracted last period under variable costing, 14,054. And then in 2020, we've got the fixed overhead in beginning inventory which was the fixed overhead in the ending period at the end of 2024. And since we have no ending inventory, there's no fixed overhead in ending inventory. So our income under absorption costing will just be the income under variable costing minus the fixed overhead in beginning inventory. Okay. So we can see in 2020, the fixed overhead, the ending inventory, right, was more than the beginning inventory, so income under absorption costing is higher. Okay, that was the same thing in 2022. Our ending inventory was higher than the beginning inventory, so we were increasing our inventory, and it was higher. In 2020, and the same thing happened in 2024. Okay, we were increasing our inventory. In 2021 and in 2025, our inventory was decreasing, so absorption costing had lower net income in those years.